Bitcoin returned to form on Monday as investors analyzed the possibility of an extended trade war and weak European economic data. The benchmark cryptocurrency was trading 1.73% higher, at around $7,995.82 as of 10:53 UTC. It spiked particularly after the beginning of the European session that, in turn, wavered against mediocre industrial data from Germany. The upswing also followed a bad market opening of US futures and China's yuan, both of which fell earlier during the Asian session as Beijing hinted a no-broad deal with the US. Trade negotiators will reinitiate talks in Washington from October 10. The US side has indicated that it wants a broad deal, which includes pledges on changing Chinese industrial policy or the government subsidies, but its Chinese counterparts want to keep the issues out of the negotiations. The move has jittered investors' sentiment further, especially after the last week's poor manufacturing and mixed jobs data from the US. Analysts now expect the Federal Reserve to announce new rate cuts to ease the market sentiments as Chairman Jerome Powell scheduled to announce his take on the worsening economic conditions. Bitcoin during the previous financial quarter decoupled itself from the US-China trade dispute. While fluctuating views kept investors confused about a definite outcome, Bitcoin remained in a corrective fall, plunging by as much as 44.47% from its YTD top. Bulls still believe that the cryptocurrency would continue the price rally that saw it soaring by more than 150% in the second quarter. Nevertheless, some reports see the interest dwindling. Crypto researchers at the time noted that institutions are not investing in Bitcoin anymore. They backed their claim with the low physically Bitcoin futures volume at Bakkt, and underperforming Grayscale Bitcoin Trust's GBTC, as well as lesser use of terms institutions and Bitcoin in the news reports. As of the time of this writing, Bitcoin had broken above the psychological resistance of $8,000, up 1.87% from Monday's open.